Business horror stories. Today we're going to talk about what happens when a business does not have proper insurance coverage. Good morning, I'm Mendy with My Insurance Claims Expert, and today I'm going to talk to you about something I am very passionate about. That is when homeowners or business owners don't have proper insurance coverages. And of course, the time to make sure you have coverage is before you have a loss. After the loss, it's too late. You're stuck with whatever coverage you have. So this weekend, unfortunately, I had to go visit a business that suffered a fire over the weekend. Their commercial kitchen was completely destroyed. There was damage to the exterior of the building, and there was smoke damage throughout the building. That means the smoke went everywhere. It went into the carpet, it went into the drywall, into the insulation, it went into their contents, electronics, toys, books, anything they had on premises essentially was in the smoke. It was damaged. Whether it needs to be cleaned or replaced, it'll depend on the individual items. So when we come to a property like this is actually a rental property, and there is damages to both the business owner as well as to the landlord. And there's two documents we're going to look at to determine who is responsible for who's required to have insurance for what, whose insurance is paying for what. Those two documents we're looking at is the actual lease, as well as the insurance policies that are in effect, whether it's by the landlord's policy, whether it's the tenant's policy, etc. So in this particular case, the business owner had a triple net lease. What that means is, based on the triple net lease terms and conditions of the specific lease, the tenant is responsible for almost all damages to the property, with the exception of structural components, as well as the roof, if it's a roof and an AC system, due to wear and tear, normal wear and tear. There were some other additional interesting clauses in the in the lease. One of those clauses were that the tenant was responsible to have a policy of $500,000 to cover property. The landlord was also responsible to take out a policy that would cover certain damages such as fire. However, while the landlord was responsible to make sure to take out that policy, the premiums were to be passed on to the tenant, and the tenant was responsible to reimburse the landlord as well as pay for any deductibles if there was a claim. So, now moving on to the insurance policy for this tenant. Unfortunately, this policy did not cover what it needed to. It was a very basic policy. Now, disclaimer, I am not saying whether the insurance agent is at fault or whether the business owner is at fault. It could be that the business owner simply told the agent, I want the minimal insurance I can get away with, just something basic. Or it could be that the agent said, hey, I'm going to offer you something to save you money. Do you want this? And the business owner wasn't aware of the limitations of this policy. That being said, this policy has severe limitations, or should I say, it had limited coverage. It essentially covered only one thing. That was business personal property. Business personal property, as defined in this insurance policy, was any contents that the business owned, as well as any build-outs or renovations that the business did that they would not be able to take with them to if they were to move out. In this particular case, based on the damages, that would refer to the kitchen, which they built out the kitchen. Okay, and I can tell you the kitchen loss alone is probably $200,000. It's a commercial kitchen. Okay, unfortunately, they only had $150,000 in business and personal property. Now, bad enough that they didn't have enough coverage because, like I said, the damages are likely significantly more than that. They have a second problem. This policy has a penalty called coinsurance clause. Okay, now what does coinsurance clause mean? Coinsurance means that, hey, we're going to do, but we are requiring you to have enough insurance. Okay, we're requiring you to have 80% of the value of what we're insuring. What does that mean? Let's say you have $1 million in value between the cost of the building and your contents. Okay, however, you only go ahead and insure it for $600,000. You are really required to have $800,000 of insurance. Therefore, you have 25% less than you were required. Therefore, if you have a loss, they're going to penalize you and pay you 25% less of what they should. Meaning, let's say you have $100,000 of damages, like we said, you had 25% penalty, they're only going to pay you $75,000. Okay, so in this particular case where they may have $500,000 of contents, they were severely underinsured, being insured at only $150,000. Therefore, the penalty for this could be 60%. Sorry, my math isn't off the top of my head, but let's just say 60% penalty. That means if they had $200,000 of damage, they'd only be getting 40% of that, $80,000. Okay, so that's another factor to be aware of, is the co-insurance penalties. Another thing that was very important over here that is not in place, and that is business interruption coverage. Let's talk about business interruption coverage. Okay, let's say this place, first of all, they're losing revenue because their kitchen is not functioning, they're not pumping out meals that they're selling, whatever it is. Well, that loss during this period would be covered under a business interruption policy. Okay, unfortunately, they didn't have that. But let's keep in mind this building may not be fully inhabitable for 6 months, a year, whatever that period of time is. Okay, instead of shutting down the business for 6 months or a year, okay, they may want to find some temporary space. Maybe they're going to go to a hotel down the street that has a conference room that they can rent and a kitchen that they can rent. The cost of renting that kitchen, the cost of renting that conference room, that can all be included in business interruption insurance. Finally, another policy just to be aware of, they did have liability insurance under a different policy, but it is important to understand that a business should always have liability insurance in case somebody sues you, etc. Let's just take, for example, imagine, thank God, the building was vacant when this happened, but imagine if there was somebody in the building and they got injured and they decided to sue. Okay, the legal bills alone would be through the roof just for this business to have an attorney. Therefore, it's important to have